Hey guys, Adam Rose, Vice President and Senior Loan Officer for Western Ohio Mortgage here in Sydney, Ohio. Today's another episode of the Mortgage Guy Podcast. Today we're going to discuss how to build credit from scratch. It is going to be semi-brief, but I think it's very good information. A lot of younger clients out there or younger borrowers out there that kind of want to skip over the rental game and straight into home ownership. Some of them are struggling with the credit build piece or may not be educated on it. So I think it's a good thing to kind of go through. I had a couple over the last couple of weeks that have had some no scores, and we're trying to create credit for them. So I felt that now's a great time for it. Quick market update, though. On the last videos, everybody's an economics expert apparently on TikTok, and so we're not going to go through all that. But I'm not going to take all the time to talk about historical trends on what's considered a recession in the past due to faulty data and all that stuff. So we're going to get right into it. Let's talk about credit in general. I mean, why it matters for a mortgage. I mean, if you've never had a credit card before or a loan before and you don't have a score, right? In the mortgage world, we don't know what your willingness to repay is. And that's the biggest thing on getting approvals, right? With credit scores is it's kind of showing not your ability to repay, right? That's the income, job history, stuff like that, but your willingness. A lot of people are like, I don't understand the willingness to repay here, but that's the whole purpose of a credit score. And one thing that bothers me more than anything is when people have a great income, phenomenal income, and have rough credit. It just shows a total disregard for that, right? That they don't care that they borrow money from someone. They're just not willing to pay you back. So that's really what this is all about. And that's how we can kind of judge the risk, right, is through the credit scoring models, even though they are flawed, right? We all know that. They work kind of funky, and the algorithms are weird, and some things that impact your credit score that shouldn't, and it is an odd thing. But typically speaking, to start from scratch, it does take approximately 6 months to show a mortgage score. I say mortgage score, it's just the algorithms used in our industry to really create a credit score itself. With consumer credit, it might take 2 months, 3 months, something like that, and you're probably going to show a score pretty quickly. But the typical method that we start with are secured credit cards. So someone that doesn't have a credit history but a decent paying job, you can provide pay stubs and stuff like that to a local bank. There's the Chimes out there, all that stuff. Secured credit cards are a great method. How it kind of works, typically you're going to see $200 to $500 range. I'm sure there might be some that are more, maybe even $100. But big range there. You're going to deposit money into an account with that institution, and they're going to issue you a credit card against that account. So it's now considered secured because you put up a collateral, right? So if you fail to pay, they close your account, they take your money and refund you whatever's left over, and that's it. But it's going to work just like a regular credit card, right? You deposit $500, whatever it is, $300, and they're going to issue you a credit card against that account. You're going to use it as usual, pay it down, pay it off every month, whatever have you here, however you want to operate that. I suggest that we keep below about 30% of the limit. All right, so example, if you have a $300 limit on your credit card, we want to keep the balance at the end of the month below $100. That's going to maximize the points and show that you're not abusing that credit card. So that's a great no-score method of obtaining some sort of credit. Another option is authorized user accounts. This is a great way to boost the score very, very quickly. Okay. Now, remember, when we talk about this stuff, it doesn't mean you have one secure credit card for 6 months. Now you can go buy a house. There are other credit guidelines out there, but this is to create that score for you. And we're going to discuss credit guidelines a little bit here in a second. But authorized user accounts, again, family member, parent, brother, sister, whatever, spouse. If you have a lack thereof in credit, bad credit, no scores, just like this, you can contact your credit card company, whoever it is, Discover, Capital One, your banking credit card, and have an individual added to the account as an authorized user, okay? This is key. What we're going to talk about next is we have to make sure that the account that you're being added to create your credit score or boost your credit score it has a great credit history, right? It can hurt you as much as it could help you, depending on the account you're being added to. So if there's late payment histories in the past, if there's extremely high balances or we're close to the credit limit, that's going to damage you more than anything. So when you're having these conversations about being added as an authorized user, you definitely want to make sure that it's got great payment history, the balances are pretty low in regards to or in comparison to the credit limit. We want to make sure that those things are in place before you get added, because it's going to add the entire payment history and where it's at currently. But that's a great way to boost it. Now, when it comes to credit guidelines for mortgage, if the only thing you have is an authorized user account, it's an automatic downgrade to a referral or manual underwrite, and there's different credit policies that get attached to this. But we're going to talk briefly about like FHA, USDA. There are a little bit difference in credit guidelines here in a moment. In another way, that's a free tool that I highly encourage everybody to do because it can actually decrease the closing cost expense if we have a thin credit profile, is using Experian Boost. Now, I personally have not played with this before, so I may misspeak, and I apologize if I do, but go out there and play with this. So Experian Boost, it is a free tool out there through the Experian website, and you may have the ability to add rental history, utility bills, cell phone bills, things that you pay reoccurring every month. And I don't know the process of how that's going to take you through it, but doing that, it's on. And we have clients that it pops up. It'll say telecom self-reported or rent self-reported, and it shows your payment history, right? How much you're paying every month. It's going to show how long you've been paying it. And the reason I say that it's going to save you money on closing cost expenses because if you're a thin credit, we typically have to add alternative lines of credit to thicken up your profile. Alternative lines of credit, what the hell's that? So rent history, 12 months or more, right? Utility bills, cell phone bills. I did a podcast not that long ago about USDA accepting subscription services like the Netflixes and the Hulus and stuff like that. That costs money, right? We send a bill to the credit bureau. Credit bureau calls and validates the information in the payment history, and they add it to your credit report as a supplement. Those things are, I don't know, $18 to $25 a pop. So when you're doing 3 or 4 of those things, it can really add up pretty fast. So going through Experian Boost, it'll already be on your credit report when I pull and give you all that history, and we may not have to go through that game. But like I said, not all adding some of these things isn't necessarily going to mean you're just going to meet the criteria for the credit policies for each mortgage. So the basics, I like to talk about USDA first because it's my favorite program. If you're a thin credit and non-validated score, so a validated credit score in pretty much everyone's eyes is one trade line in your name for 12 months, right? FHA will let you get away with even 6 to 10 months as long as you're an automated approval. But let's talk USDA, thin credit, no credit, what have you. We have to have 3 lines of credit for USDA for 12 months if you're a manual underwrite, okay? Manual underwrites are usually under 680, which we've found has been kind of challenging if you don't have a lot of reserves. But 680 is kind of their mark unless you have a lot of money in the bank. So if you're under that mark or no score, what have you, we're going to have to get 3 lines of credit. Now, the good thing about USDA is if you have 12 months of rental history and we verify it, which use Experian Boost, it'll already be there, that technically counts as what I would say just 2 lines. But so if one of your lines of credit on the alt lines is rent, you only need 1 more now. Now, if you don't have rent history, we have to get those 3 lines of credit, right? If you're part of utility bills, phone bill, car insurance, the Netflix, the subscription accounts, stuff like that, that's what you got to do. FHA, you can get away with 1 line of credit. For as long as you have a good credit score and you have money in the bank, you might be able to get away with 1 line for 8 months, 9 months. That's in your name. But again, if you are a manual underwrite, okay, and not an automated approval, all that stuff goes away. They require 3 lines of credit for 12 months. So adding the rent, which isn't double like USDA, so it would be rent, some utilities, car insurance, phone bill, whatever, to get those 3 lines of credit. So highly recommend, guys, going through that Experian Boost anyways. Get as many of those services added as long as they have a clean credit history, right? Don't make any late payments because that'll impact you as well. It'll show up. But that can help boost the credit a little bit. It can help reduce closing cost expense, reduce turn times because sometimes when we add these supplements, it takes time, right? The credit bureau is trying to contact him and get all his validation going, and we've waited on some of this stuff just to get to the closing table before. So highly suggest going through Experian Boost. And if you're out there and you just don't know where to start with the secured credit cards. Talk to family, spouses, whoever on the authorized user account option to boost the score, right? Because when you look at a no score on credit, it really impacts your rate and your expenses to close. So if we can just create a credit score, even if you're not meeting all the credit guidelines with an authorized user account, your rate's going to be based off the actual credit score. So that's a big deal. So I hope that information was helpful, guys. Look into it if you are in that position. But remember, just Experian Boost, pretty sure it's free. Check it out. Go through the steps. They'll be able to advise you on what they need to do to collect the data and information, get it reported every month. That's all I got for you this week, guys. I hope this was helpful. Remember, subscribe on YouTube. Check us out on Apple Podcasts, Spotify. We'll catch you all next week.